Hello, welcome back. I'm just coming off of a long flight, coming back home, and I just can't relax, right? I was about to sleep, and then all sorts of earnings reports are coming out, and all sorts of exciting things really coming out. And this is why I had to make this video, and I will probably be making a few more before actually going to bed because, again, exciting news right now. Lots of things happening in the markets, and in this one, we're going to talk about PayPal, which just announced earnings. I'm actually creating this video like 10 minutes after earnings were announced. And you can see here in our tool that we already have the news piece. PayPal jumps as Elliott Management says it has a $2 billion holding in the financial services company. Let's take a look at this article here. So, PayPal's results beat expectations for the second quarter, and the financial services company has a new $15 billion share buyback program. Another very interesting thing. Now, you will see here that PayPal shares are actually up about 13% right now. We can kind of take a look at that at the metrics page, which we will examine a little bit later as well. It's actually at 11.3 right now, but this is going to be going up and down quite significantly during after hours. That's very normal. Now, you will see here what is happening. Elliott Management seems to be taking a big chunk of PayPal here. And as one of PayPal's largest investors, with an approximately $2 billion investment, Elliott strongly believes in the value proposition at PayPal. PayPal has an unmatched and industry-leading footprint across its payment businesses and a right to win over the near and long term. And we have talked about PayPal in the past, examining the company and talking about how this looked like it was an interesting opportunity. Now, after it's being up about 11 and 12%, we're going to examine it again, re-examine it with our tools here and see whether it's still a buy after the earnings report. Now, here's what happened. PayPal did in the second quarter this 93 cents per share adjusted versus 86 that was actually expected here. This is a beat, of course, as you can understand. And in terms of the revenue, another beat, 6.81 versus 6.79, according to the analyst expectations here. And PayPal announced a comprehensive evaluation of capital return alternatives. As it said, it revealed a $15 billion share buyback program. Of course, this is extremely important for us. Now, 15 billion shares in terms of a buyback program, in order to see how much that is, you can take a look at the market cap of the company, which is about 104 billion right now, meaning that the company has announced that it's buying back about 13 to 14% of their total outstanding shares count, which is very, very significant, as you can understand. And with the company's outstanding shares already being down, this is going to make it go down even more. So I love to hear that from the company. I love to see that announcement. Now, for the full year, PayPal said it expects 3.87 to 3.97 in adjusted earnings per share, and analysts polled by Refinitiv had expected 3.82. So this is another beat over here, as you'll see. So yeah, this is great news from PayPal. Actually, much better than I would expect here. Now, the ship has sailed is the question. I mean, is it already too expensive to enter at about $100? So we do know that the company seems to be heading at better horizons, I should say. But is it still a buy based on what they are doing financially? Now you will see that the PE ratio is sitting at 30 almost right now, and it's gonna go higher after the markets open tomorrow. All these values are gonna go higher, yet they still may not be as expensive as it looks like over here. We need to examine that with our stock evaluation tool because there is other factors coming at play which the evaluation tool can actually tell us about. Now, the revenue of the company has been growing nicely over the years, and again, this is already a pretty big company in the space, and net income growth that has also been increasing, free cash flow and total equity as well. And the company does have a little bit of extra total liabilities compared to the free cash flow that they are generating, but the return on equity and margins here are looking fairly solid. So this is another nice thing to see here for the company. Now, I do want to take a little bit of a look over here on our financial statements. The first thing that I want to take a look at. From 13 billion to 25, doubling their revenue pretty much in the last 5 years. And in terms of net income, 1.7 to 4.1, about tripling that, the net income, even better than the revenue. The balance sheet of the company is showing us that the company has about, let's see it here, 54 billion in total liabilities, which is obviously a lot, especially when the total equity is sitting at 21.7. The company does have significant total liabilities here, as you'll see, 54, and they have been increasing tremendously over the past few years. So the company has increased the total liabilities here by a large margin. Now, if we take a look at the cash flow statement real quickly, you will see that they are making about 5.4 billion in terms of their free cash flow right now, and they have been increasing that through the years. This is about a 10 as we examined as a factor of the total liabilities count, which may be a little bit high, but overall, with the fact that the company is doing better and better every year, this may not be that concerning, frankly. And the net income again generates about 6.34 billion in terms of operating cash flow here because of some stock-based compensation and depreciation, amortization, the typical things here, pretty much being added back to the operating cash flow for the company. Now, the cash from operating activities, you will see here, has been in the negative, which is a good thing overall because the company has been spending for acquisitions and investments here. You will see a lot of purchases here. And in terms of their financing activities, they're repurchasing common stock, and this is going to be much, much higher in the next few years, it looks like. Now, I'm not sure if they have announced in how lengthy the buyback program will be. It typically is about 1 to 2 years, maybe 3 in some cases, but we should be expecting these values pretty much consistently to be going higher in terms of net cash from financing activities, more in the negative, which is a good sign for the company because they're going to be repurchasing common stock. Okay, so the company has about 18 billion in terms of their cash position here, and again, they're making 5.4 billion in terms of free cash flow. Pretty solid financial position in terms of cash over here. It has grown through the years as well, which is nice to see here for the company. Now, an interesting thing about the insider trades here is the fact that we have purchases, and whenever we have purchases here, this is generally speaking a good sign because there are many things, as the known saying says, there are many reasons why somebody would sell a stock. They could be selling it for compensation, for instance, but there is always one reason why they are buying. They're buying because they think that the company stock is going to go higher, and you will see here that there have been some purchases here, some buys of significant amounts of stock over here, in the thousands over here, or millions here in some situations. So there has been some buying, and this is typically not happening with most stocks. And when you see that, it may be a green signal, a good sign actually for a company. And so I wanted to stress that out. It seems like it's increasing in terms of a percentage. Now it's less here as an absolute number, but it's more as a percentage of the total buys and sells in terms of insider trades. Likewise, we have quite a few buys from senators. Take a look at this. 6 months ago, 11 purchases. 3 months ago, 6 purchases. But again, it's a matter of absolute and relative numbers. In terms of relative numbers, because it's just less movement here, it's higher than what it used to be 6 months ago. So there seems to be a tendency towards buying this stock instead of selling. And you can kind of see here, you will see some of the sales full, but you will also see a lot of purchases here. Nancy Pelosi actually has bought quite some over here as well, which is always interesting to see. And some other senators. This is a very large amount as well, in the millions really, 500,000 to 1 million. Pretty large amounts here. Another large purchase here. And yeah, somebody was selling as well, but significantly less amounts over here. And Kathy Manning also purchasing and selling some. So overall, yeah, there is some buying action here for the most part. Of course, there's going to be some selling too, but for the most part, there is buying action. Now, in terms of our stock evaluation tool, because we need to know whether we are too late to the party. What about the revenue growth? It's been about 18% pretty much every year, at least as an average. It's almost every average about 18%. So we need to use this one for sure. It's going to be our high one, but we're going to go, let's just go 13, 15, and 18 here and see what we're getting out of this. And in terms of the net income margin, again, about the same. And I'm going to go in between these values. I'm going to go 15, 15.5, and 16. I think that makes a ton of sense here. And in terms of free cash flow margin, Overall, the company has been doing more than 100% over here for the most part. So I will go 100, 110, 120, and annual return of 13%. So let's see what we're getting out of this. I'm curious now. So yeah, okay, even at this current valuation, now remember this is going to be at about 100. This is 90 right now, which would be a pretty nice opportunity potentially, at least for our medium estimates here, which are very fair. But right now we are gonna be seeing the stock jumping at about $100, so it will be in between these values. So do I still think it would be a buy at about 100, which is going to be happening tomorrow? Well, practically speaking, I think it could be an interesting opportunity to add some to a portfolio. Now, it's probably not the best time. It would have been much better to buy earlier. And again, we have made videos in the past and talked about PayPal, how it would be an interesting opportunity and a good one to add to a portfolio potentially. In fact, I actually wanted to add it myself, but I never bought it. I guess I was, kinda like my attention was actually not there because I was out on vacation for a little while, and so yeah, I wasn't paying too close of attention there, and yeah, I actually missed that boat. But okay, there's gonna be more. But yeah, I think it may be an interesting opportunity to potentially add a little bit, even as it is at $100. Maybe not go full, but I could definitely see myself potentially adding a little bit here. Looks like the company is doing better than I even expected, and I was bullish for this company. But okay, yeah, that's what I wanted to talk about in terms of PayPal. Expect more videos, quite a few more actually, because there's tons of earnings. Next one is probably going to be about AMD, and I'm gonna be making it shortly. So stay tuned, and I'll see you in the next video. Thank you for now, and again, remember to leave a like and subscribe if you're not a subscriber already. And again, stay tuned, another one incoming very soon. Bye bye, guys.